In today's video, I want to introduce one of the best and most accurate buy-sell signal indicator, which is a perfect choice for scalping and day trading. Just make sure you watch this video until the end because I'm going to teach you a trading strategy based on this indicator. Alright, to add this wonderful indicator to our chart, here we click on indicators and we search average sentiment oscillator. This one, which is an editor specs indicator and written by someone named Kivong Ozbilgik, if I'm pronouncing his name correctly. Alright, this is the indicator, and as you can see, it's added here below the chart. It's actually an oscillator, and you can see that these red and blue lines are moving above and below the center line, which is 50. As the name of this oscillator is indicating, it's a sentiment oscillator. In other words, it shows you the sentiment of the market. It tells you if the market is bullish or bearish. This indicator is a copy of a popular indicator on MetaTrader platform, and many intraday traders use it for knowing when the balance of power between bulls and bears is changing. Alright, now let's see what we have here. This blue line is bulls percent and the red line is bears percent, and because they are percentages of 100, they mirror each other. Each of the line that is higher than the other one, it is the dominating sentiment. When the blue line is above the red line, it shows that the bulls are dominant in the market, and when red line is above the blue line, it shows that the bears are dominant in the market. If you take a look at the price, you can clearly see that when the blue line is above the red line, the price is advancing, and when the red line is above the blue line, the price is declining. Actually, the center line crossover shows the shift of power between bulls and bears, so these crossings can provide us trading opportunities because they show change of powers between buyers and sellers. But as you can see, we have many noises. For example, this sell signal is a false signal, or this sell signal here is also a false signal, or look at this buy signal here, it's a false signal. So we need to filter these noises. In the first step, we go to the settings of the indicator so we can make the indicator a little bit smoother. For the period, we set it at 35. By doing so, as you can see, we have smoother lines and many of the false signals are removed, but still we have bad signals like this, and we need another layer of filtration. One of the indicators that is suitable is Andean oscillator. This one, which is an editor specs indicator and written by Alex Grover. It's a good choice because on one hand, it helps us to filter the signals during flat market, and on the other hand, it helps us to take only the signals that are in the current direction of the market. When we have a bullish signal like this in Andean oscillator, the green line should be above the orange line, and when we have this condition, the signal is confirmed and we can enter a long position here when the new candle is opened. The stop loss for this trade is placed below the previous swing low and the profit at 1.5 risk to reward ratio, and you can see that this signal could provide a very profitable trade. On the other hand, when we have a bearish signal like this in Andean oscillator, the red line should be above the orange line. When we have this condition, the signal is confirmed and we can enter a short position here based on this signal when this new candle is opened. The stop loss for this trade is placed above the previous swing high and the profit at 1.5 risk to reward ratio, and this trade was also a profitable trade. As you can see here, we had a bullish signal, but in Andean oscillator the green line is not above the orange line, so the signal is rejected. And for this bearish signal here, you can see that in Andean oscillator the red line is on the verge of crossing above the orange line. You can wait until the next candle to see if it crosses above the orange line successfully, and when it happened, you can enter a short position when the condition is met. So we could enter a short position here as the new candle was opened, and for this trade you can see that it was a profitable trade where the price declined down to this point. Andean oscillator helps you to filter most of the false signals that happen during flat market. For example, here you can clearly see that the market is flat and we had false signals during this period, but none of them is confirmed by Andean oscillator because the green line and red line could not cross above the orange line. For this bullish signal here, the green line is above orange line, and we can see that after that the price advanced, so it could be a profitable trade. But this is not always the case, and you will encounter false signals. There is no indicator or strategy with 100% guaranteed signals. Losing trades are always part of the game, and you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's a perfect choice for scalping and day trading. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it because without a proper risk management strategy, you cannot protect your trading account. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. well. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.